Okay, so we're going to jump right into it. So for the month of July, we are recommending a float stance with a confidence score of 4. And yes, our confidence is a little waning, which we'll talk more about in this video. It's Todd, Pacific Residential Partners. So we're going to take a look at our July interest rate outlook for this month, and we're going to jump into it and talk about all the details and implications of what has occurred over the last month or so and what we expect to happen in the month of July. So let's start with, it's hard to believe that in the last 30 days, we've actually seen some stability in the markets. Our interest rates are still at 6%. And as of right now, we are again kind of gravitating towards an upward trajectory in rates. We're again touching almost a March high. So, as we are in halfway through the year, many of the experts are continuing to speculate about the Federal Reserve's decision regarding interest rates. That's always, the hot topic. A lot of analysts suggest the Federal Reserve may have one more rate hike up their sleeve, and there's some that think that we're done. So that's going to continue to play out a little bit. It may create a little bit of volatility, but I don't think that fact alone is going to drive interest rates. So one potential rate hike, though, in July could signal, again, that the economy's progress is at a place where everybody is somewhat comfortable with it. There continues to be indications from the Federal Reserve that we're on track, and we're at a place in the road where there is stability and we are sustaining a recovery. This positive sentiment could instill some confidence in investors and potentially attract new capital in the market, which is good for interest rates. However, it's really crucial to understand the various factors that could influence the Federal Reserve's decision as well. So the Federal Reserve is going to closely monitor economic data, including inflation and employment figures. If those indicators show that the economy is starting to cool or not meeting the desired targets, they may choose to hold off on a rate hike. So keep in mind, too, that the global picture is still a little murky as the U.S. is trending downwards for most inflation readings. But in Europe and other parts of the world, they're still experiencing some mixed data and in some cases some upticks in readings, which is really makes it confusing, especially for our Federal Reserve policymakers here. So we're going to continue to see most of the inflation talk to be uneventful and just posturing. So I am truly shocked at one sentiment that I continue to see, and I'm very surprised. There now seems to be ample support for the Fed on how they manage monetary policy thus far. So a lot of people are starting to use that term that we love about a soft landing. So I'm not sure if we're ready for the Federal Reserve to take a victory lap, but there is some support now, which is somewhat unusual. So what does this really mean for you? It's important for you to keep updated on what's really going on in the market. My advice is to not overthink rates and look to July and be prepared for potential market volatility as expectations and speculations may fluctuate heading up to the Federal Reserve's decision in July. So again, let me reiterate our stance for July, and that is a float, but with a confidence score of 4. We just feel like there's a lot of volatility out there and there's a lot of unknowns, and we're going to have this back and forth sentiment about one last rate hike or whether we're there already. So I hope this update was helpful. We seem to be back on track with our last few months of outlooks. And as always, continue to watch our social media channels and let me know if you have any questions or suggestions. Thanks again.